profit play. Here we go. So daily profit play. Where did my notes go? Apparently I lost my other browser. Okay, whatever. So we just wrapped up a nice 2-hour masterclass for daily profit play. We had a 2-day workshop just a couple weeks ago, November 18th and the 20th. We had a bunch of new members joining this week, so we ran another nice masterclass. Look, I just the strategy keeps getting better and better. I'm really happy with where we're at. We've been running the service now for 14 months. We are winning like 89.2% of our trades. We've added a defense trade where we can make our losses even smaller, potentially even wash the loss in the same day, which if you are familiar with, selling out of the money options, it's very difficult to make up for that loss immediately, but we have a way to do that in our daily profit play. So anyway, putting that all together, it's been a lot of fun. We had a nice undefeated week this week. We didn't take a single loss. We had all winners in daily profit play. We had 2 trades close out for winners this week in waterfall income. I'm going to assess my project options edge. We have a handful of trades. I wrote these down this week. So I have trades in, let me take this here. Trades in Home Depot, Hims, Chipotle, Coinbase, Costco, Micron, Adobe, T-Mobile, Dutch Brothers, Pepsi, and Zoom, all at like 80 to 85% profit. And it's, the final 26 minutes. I'm probably not going to close these today. I'll probably let them decay over the weekend. Price for this week, extremely quiet. The market did go up. We started out the week, ended up having some pullbacks, but really it was like we gapped lower, and that was it. Like that gap lower on Monday was Monday, Tuesday, Wednesday, Thursday, Friday. Price barely moved all week. So, I don't really make much of this outside of we do have all-time highs not that far away. I would say that these all-time highs could certainly be a little bit of resistance in the near term. I would hope that this is going to be an important thing to lean on for the holidays. We don't want to see price taking out these lows. It's that simple. Like price, you do not want to be a bull in this market and watching price challenge or taking out those lows, because if that is the case, we have a much bigger correction that's probably going to hit like 6,100 or 6,000. Okay. So right now, for this market to stay intact, I think you just want to see path of least resistance, hit the highs. You want to see some more to the upside. I could see the market opening next week. We have FOMC on Wednesday. I could see the market pulling back a little bit and then still trying to find highs into the end of the year. If we can get through the Fed next week on Wednesday without a ton of price disruption, I think the market is just kind of on its little light drift to the end of the year. But we will find out. Okay. Mike. Yeah, Mike's been asking for daily or a final hour all week. Yeah. What up, David? Strikes on Pepsi. That was for Project Options Edge. That was the ratio spread. It's like a 99% chance of profit on this one. So I don't really have to do anything on it. But here's what here's the trade. So Pepsi, we're trading at 145. I've got a 110 by 105 out to January. So in the next 42 days, this thing's expiring. Now, I pulled in $1.19. It's trading for $1.16. Like I'm up 97.5% of profit. It doesn't really do me any good to have this risk or naked put. If I can close this thing down truly for 3 cents, I'll take the profit. So it's not closing at 3 cents. Let me try 4 cents. If it closes for 5 cents, that's as high as I'm going to go. Otherwise, I'll keep my probability to profit. Not filling. So I'm just going to cancel it. Like it should be a winning trade. We have the 105 as my strike that needs to be like I need price to stay above this. This is literally a 2 delta. So we'd have to have an outlier type move on Pepsi in the next 42 days through holiday trading, through Christmas, through New Year's, through the first part of January, and have some ugly, defense trade sell-off. I don't think that's going to happen when the plus minus is 650 and I'm trading at 145 and I have a $50 buffer. We would have to essentially have like a 9 times move. And, if you know standard deviations, like a 3 standard deviation move covers like 99% of all trades. So again, there's risk, but I'd say that most likely I'm just going to pull that full $1.19 profit. Okay. Let me just show these really quickly. So Home Depot, this is for Project Options Edge. We're trading at 353. I'm up 80% of my max credit, $135. Max is 170. There's a 99.5% chance it stays in full profit. So I don't have to do much. This is a nice little winning. I mean, honestly, let me just add this up. If I have, this is Project Options Edge. If I can win $1.70 on Home Depot, I'm going to write this down as I'm doing this. So 170 on Home Depot. HIMS is a little bit more with the ratio spread. We're trading at 39. I have the 25. I'm up 330 bucks, 88% of max credit. That would be so $1.70. That one would be worth $1.25, but I've got 3 contracts. It'd be $3.75 for me. Then I have CMG. This one I'm going to repair because I'm getting some assignment. So I have 200 shares already. We did a naked put combo trade. If Chipotle gets back over 40 bucks, then I'm going to repair this thing for $500 to $1,000 of profit. So I have shares. My break even is around. Let me see here. So let me go to. I'm just going to go to my tracker. Let's see here. So I've got the 42.50 and 40 assigned. My break even is 37.11. I've got strikes at 40 bucks. So if I get out of this trade, that would be 37.11. 37.11. Get it called away at 40. I make $578. So if I repair it, great. That's what I want. I don't want to hang on to the shares very long. I'll just repair it, see if strikes get back above 40. Okay. So that shouldn't be too difficult. We've talked about that one for Pfizer and Chipotle for Project Options Edge, potentially having an assignment, and I'm going to repair it. That's a beautiful thing of also like having some cash and dry powder to own and flip. I don't think Chipotle should be just dead in the water. I mean, Chipotle has had a monster sell-off, right? But if we just come back and even, attempt to fill this like nasty earnings gap, which by the way, earnings were positive, but this just had a massive correction. So, I mean, we've got some we're talking like legitimate bear market support all the way back into the 20s. Could it go lower? Sure. But even if we came back into some type of orderly pullback and this is a time to see a bottom, if the market bottoms and it rallies back up, I get the strikes called away at 40 plus. We saw this with UNH this year. We saw this with even Meta that had like a 20+% correction. Meta's ripping. So Meta, after a pretty nasty correction, we pulled back right around that 50618 fib. And from there, we bounced up pretty hard. I mean, Meta's trading at highs at almost $800. Meta was down 27%. And it's had a nice little recovery over these last couple of weeks. It's up, $95. So we had a 610 by 615. That's pretty much in full profit right now. We took like $50 out of that trade because I didn't like that it was $20 to $30 lower than my strikes. So I didn't want to take the chance on some limp in Meta for the end of the year. All right, what's next? So Chipotle is going to be a repair. I think that one looks pretty good for like 578. That's my repair trade. Coinbase. Coinbase 270. I've got a ratio spread out to, this is only 14 days away. I'm up 135 of the $144, so 93% profit. Again, the strikes are a little wide. If I can close this thing down for like a 10 center, it's showing a mid at 20. Like I can't close it for 10 cents. If I close it for 10, I'll take the trade off. It filled at 8 cents. All right, so I'm closing that for Project Options Edge. Cool, that's even better. Project Options Edge right here. Trade management. Coin entry was $1.44. Closing at 10 cent debit. Actually, 10 cent debit filled at 8 cents. So we're keeping $1.36 of max $1.44. Nice win. So keeping Coinbase. Now, if I have coin elsewhere, I'll just close this down. So let me see if I can close this for $1.43, close it out for hopefully, I'm going to try to go 8 cents since that was my fill. 8 cents. Filled at 6 cents. Awesome. Even better. Cool. So that's officially out for Project Options Edge. Take the winner. Okay. Same thing here. Close. 0.06. filled at 0.05. These are really good. These are really good fills. Coinbase is not in this account. That's a cash account. This one is a cash account. This one should have it. Coinbase here. Let's go 0.06. Filled at 0.06. This account doesn't have it. This account will have it. Okay, so I'm keeping $1.36. Actually, I'm keeping like $1.38. I'm just going to write this down. So this one is a check mark because it's closing. Okay, anything in this one for Coinbase? No. This one for Coinbase? No. Coinbase, no. Coinbase, yes. Close for 6 cents. Filled at 6. Filled at 5, filled at 6, good. Okay, just a couple more accounts. I'll keep working through what we have. Coinbase closing. So ratio spread 140. Closing at, let's see if we can go 0.06 again. Filled at 0.06. Not in this one. Not in this one. Not in this one. All right, good. So Coinbase is done. Cool. Okay, next up is Costco. This one I'm not really worried about. This is a 42-day expiration. Pulled in 418, is trading for 390. I don't think Costco is going to drop $240 in the next 42 days. So it's already up a decent amount. Max profits 418. I'll let this one sit over the weekend. If I'm showing over $400 and I close this for like less than 20 cents debit, I'll probably just take the profit, try to close out for over $400. So that's going to be a winner of about $400. Micron, another one for Project Options Edge. This one is out 42 days, 82.50 by 80, trades up to 237. I'm up 87% of max credit. This one should be good for $1.69. I'll put $1.59 in case I want to close it, take some profit, but looking good, like 99% chance of profit. Adobe, up 85%. Max credit's 195. I'll say I'll get $1.85 out of that one if I want to manage it. T-Mobile. T-Mobile is here. 195. That's up 74. Max profit's 261. If I get like 240, just writing down my credits to see like in the next like 20 to 40 days, I should have a decent chunk of profit. Dutch Brothers. This one, $82, max profit 99. I'm just going to hang on to this one. Should be good. That'll be 99. And then I've got Pepsi, which was like $1 and change. Pepsi is worth $1.19. Yeah, so I'm just going to let this one go to like $1.19. If it's not filling at 3 cents right now, I mean, it shows them up $1.16 out of the $1.19, but it's not letting me close it out at 3 cents. So I'm just going to let a little bit more time pass on that one. And then Zoom. Zoom is up almost 80%, 150. I'm up 117. So I'll probably get like 140. So I'm taking like a little bit off the max profit. But if I add up this for Project Options Edge, we are sitting on a pretty high probability trade for $1.70, 375, 578 on that repair for Chipotle, 138 on Coinbase, $4 on Costco, 159 on Micron, 185 on Adobe, 240 on T-Mobile, 99 on Dutch Brothers, 119 on Pepsi, and 140 on Zoom. So about $2,600 of profit in the next like 20 to 40 days. This is on like 9 accounts. So that should be about 23 grand over the next like 40 days. It's not too shabby. Nice way to kind of finish out the year. Yeah, I mean, I'll take it for sure. So that's what I'm looking at for project options as far as some of the swing trades. Let's get some comments here. The 10-year yield was up yesterday, so the Nikkei, which I thought was a little unusual. Let's have a look. So JP 10-year. I mean, this thing is, yeah, this is crazy, man. Yields are going higher. The Nikkei has struggled at these recent highs. This was a November 3rd or 4th all-time high. I mean, I still I don't really understand what the Bank of Japan does for monetary policy. Okay, look at the Japanese yen here. I mean, we had highs at 158 almost. We had recent highs, obviously, at the 159, 160 plus handle. The idea of the carry trade unwinding, I mean, I really think there is some monetary policy stuff going on in the background where it's like, look, do not let this stuff become like an unwind. I think there's some repatriation. I think that, going into, money going back to Japan and no longer borrowing at 0% interest rate and putting it anywhere in the world, but rather, I mean, if you're going to borrow, you don't have to pay to borrow. I guess there's a slight arbitrage. Like if you borrowed at 1.94% Japanese yen and parked it into a US Treasury at 4%, you're still making something. But after like currency swaps and costs and exchanges and fees and taxes, like it's pretty much a wash. So I do think that in the background, like the carry trade is susceptible to like an unraveling. The only issue that I have with this is there's no price action suggesting that we should be selling, anything that's yen related. So dollar yen isn't going higher, isn't convincing me I should be short right now. Swiss yen has not broken any type of trend line. Swiss pairs in general, which is a 0% interest rate. Aussie Swiss is finally starting to cooperate nicely, which is good. CAD Swiss cooperating nicely, which is good. This is stuff I've been waiting for literally 2 years. This is ridiculous that I've waited this long. But it is starting to show better signs of bottoms and better signs of bullishness. Dollar Swiss is still sideways, but the Aussie Swiss, CAD Swiss, New Zealand Swiss, Euro Swiss, those are all looking pretty promising for some gains. So anyway, that's kind of my currency exposure is I'm in a Swiss basket. I've had a couple of one-off trades. I'm long Aussie CAD and still holding. Fudge, I should have taken. I was trying to get back up here to like 93.50. I still like this trade for a symmetry long around 93.50. New Zealand CAD, I added in at the lows. I added in here around 7,900, and I have a pending order at 78.45, 78.50. I'm looking to see if this will go back up to either the midpoint or get all the way back up to the same top again. Just a big range trade on New Zealand CAD. Okay. And then just the Japanese yen basket is just not, it's not convincing me to do anything. Aussie yen is still stronger. CAD yen, still strong. Euro yen, still stronger. Pound yen, still stronger, right? New Zealand yen was sideways for a while, but like the Japanese yen basket is not showing signs of strength. Dollar yen is strong because we have a weaker dollar. Look at the dollar. The dollar from these recent highs at 100 plus has dipped, 135 points. So your dollar's weaker. Your dollar Japanese yen has dropped a little bit, but I would still be like, I don't know, just waiting. Like wait for this entire basket of Japanese yen to line up. And that's the tricky part about the Japanese yen is when it lines up, you could be looking at thousands and thousands of pips of movement. But when it doesn't line up, it's like just treat it like an individual currency pair. And right now, the basket's showing more weakness than it is in strength. We just have a weaker dollar. But literally, Aussie yen, CAD yen, Euro yen, Pound yen, Swiss, like they're all up. So Japanese yen is not strong. Even though the yields are going up, Nikkei is still near all-time highs. I think that, I think the Japanese economy still wants to see all-time highs in the Nikkei. So I'm long the Nikkei. I'm long both. I mean, I'm long FXY, which is a Japanese yen stock essentially, and I'm long EWJ, which is a Japanese yen related ETF. I think I'm long EWJ. EWJ. Yep. So I'm long EWJ, dollar cost average in around $66. So I'm up almost $20 a share. But I'm just going to keep riding this because this is excluding the bottom 15% of laggards in the Nikkei. And hopefully this will continue to make all-time highs. And, maybe this is an outperformance in non-US trades, similar to what I'm doing on like SCHY and some non-US stuff. Okay. DUK is at Duke Energy. Duke Energy. Yeah, so let's take a look. Let's look at fundamentals here. Duke Energy. Um, I mean, fundamentally, I'd like to see something stronger, but it's dumping pretty hard. Fair market value, we're 18 times earnings. I mean, wow, that's a big drop. So, yeah, I wouldn't be in a huge hurry to buy this. This might be kind of a wild play here, but I would be patient on Duke Energy and just see if like maybe this utility sector has a little bit of a cleansing and you can just kind of reset at a better value and hold some of these for some dividend plays and some lower beta. I mean, it's a negatively correlated asset. So I mean, S&P is like your 1, right? Your 1 beta. This is a negative zero point 0.1. So it's showing negatively correlated. I don't love that fundamentally. I mean, this stock from the bottom in 2023 is up 56% for utilities company. From the bottom in COVID, this thing's up 100% as a utilities company. Um, so yeah, I mean, I don't know. I wouldn't be in like you're not going to get a ton of premium for this thing dropping, 10% either. This thing is down about 10%. It's not like you can sit here and sell premium and be like, oh man, I cleaned it up on Duke Energy with this out of the money put. Look, if I want to sell an out of the money put, I'll do this at $85. So let's look at Duke Energy. Here's Duke Energy. I would go out to like January 2027. And could I do like there's no premium. If I literally did like a 90 by 85 ratio spread, I get $1.14. I could own shares at $80, $79. That's not a terrible break even. That's not a terrible break even. This would be below like 2022 lows. But that's a long trade to sit in for $114 of profit. That also doesn't really have a tight bid ask. It's not super liquid, but it's a pretty safe trade. I mean, there's a 97% chance profit on the trade. So if I want to throw it out there as an income trade, I think it's a great trade, but I'm not making a ton of money. You know, I tie up some, this would be in a margin account, but if I tied up $300 to make $115, like that's not a bad trade. Make $114, tie up $306 in margin. That's a 37% return. But if I was to sign the shares, I'd have to take on 100 shares. I'd own it at $79 and I'd flip it for repair. An at the money strike, if I went out for a covered call, at the money covered call, I could make anywhere between, $1.50 to $3. So I could repair it for probably $100 to $300 if I had to. So do I like that trade? I mean, yeah, I don't mind it. But what I'm saying is I'm not going anywhere near this current price. If this thing wants to drop, great. I'm going to take trades way the heck down here. We got to be below freaking $80. So let me see if this will fill. I'm going to try an 80. What did I say? 90. So this was January 2027. A 90 by 85. Oh boy. Very different now. 95 by 90. Now I own it at 84. Like that's more credit. Still a 95% chance of profit. Big difference. Let me see if I can get that $1.15 on this trade that it showed originally. Okay, $1.10. If it doesn't fill for $1, I'm not going to take the trade. 110 not filling, $1.05. Final offer at $1, and then I can consider moving the strikes. Didn't fill. All right. 90 by 85. Garbage. 95 by 90. If that fills, like that's $200. I would get assigned at 90 minus the 5 minus the 220. I'd own the shares at 82.80. Again, look at your support. Pretty big support here at $83. So if this trade fills, I'll consider it. 220. I'm going higher in strikes, a little bit more buying power, but break even with it's not a terrible delta. 220. If this fills over $2, I'll take the trade. 215. 210. 205. Nope. Final offer here at $2. If it doesn't fill, I'm not taking the trade. Nope. Not filling. It's fine. Like I tried to set it up, have a good option trade, didn't pan out. No big deal. Okay. I was only looking to the news to justify the moves on the 10-year Nikkei. Yeah, I don't know, man. I mean, the yields are rising. I mean, look, you look at global yields right now. I think I have do I have a global yields? Inverted yield 10, earnings investment grade. Nope. I just did this on credit spread stuff. Let me see if I can get oops. Okay. Please provide a line graph showing US, Japan, Eurozone, UK, China, bond yields at current prices. See if ChatGPT will rip this up real quick. I mean, for the most part, global yields have been rising. I've seen China bond yields going down. US bond yields are going up. Japanese bond yields going up. Let's see if they'll actually give it to me. So looking at US 10-year. I mean, it's not going up a ton. We don't have these like major rate of changes on the US 10-year, but we are not lower. So even with the rate cut coming next week on Wednesday, bond yields, if there's a big rate of change, up or down, we have to pay attention. Mike says no volume. How's my volume? Can we hear? Can we hear? Audio? Nothing changed. Let me know if you can hear. Okay. Let's see what this shows. 10-year bond yields, US at 4%, Japan up to almost 2%. China is going down slightly. So we have, let's see here, China. All right. So UK. Oh yeah. There's just there's no liquidity. It's not there's no open interest, no liquidity. Okay. So US yields up here. Japan is trending higher. Europe is trending higher. China is trending lower. US is the same. Right. So global yields rising does mean that this big bad, debt bubble globally is going to have to be refinanced at some point. This is like the big debt bubble everyone's talking about, but the reality is like it's not imminent danger. I mean, this probably has until like 2026, 2027, 2028 until this all has to be like refied and pushed out. And yields and prices could be at very different levels in the next 3 to 6 to 12 months. So anyway, I knew that Japanese yen was going higher. Europe is higher. US is steady. China is down. But across the board, it's not getting cheaper to borrow. It's just not yet. It's not getting cheaper to borrow. And I don't know if it's going to get cheaper to borrow. That's the unfortunate side is we might just have like these sticky yields that it's just businesses are going to be pressed higher for longer. Refinancing will be difficult. Right. So honestly, like there might be this weird period of like refinancing at like extremely short durations, like refinancing for like a 1-year window and refi. It's like, who knows? This is literally what the Fed is doing. I mean, the Fed is doing like nothing but focusing on the short end of the curve and just borrowing at, 3.3%, which is nowhere. Like you can't borrow anything for 3.3%. You can't get a mortgage for 3.3% right now. You can't buy a car at 3.3% financing. So yeah, I don't know if we're trying to build a world of financing at like sub 12 months or sub 24 months, like that's a really, really short window to just keep like this debt cycle running. But anyway, all right. Okay, that's a final hour recap. It is 4 p.m. The tape for the week. S&P is up for the day. Really quiet overall price action. We are talking, virtually like little to no movement on the day. Here is 68.66 open price, and we closed at 69. We had a 3-point move on the day. So plus or minus, very, very quiet. The plus or minus in the day was 30. Um, I also want to spend a couple moments. So I spent time with the Tanuki trade team yesterday. I thought this was really cool. Inside, so I use their app every single day for Trading View, and it is right in here somewhere. Here it is. So my everyday gamma between what's positive, what's negative, what's our transition zone, where's my big sticky gamma levels. I use this stuff every single day. TradingView has some restrictions where they can only get like 5 updates a day on their TradingView gamma. So inside of their live web app, you can actually have live gex or live gamma, which I think is pretty awesome. So if I come into this every single day, go into my gex live, I primarily focus on SPX and SPY and Qs. So this would give us like our big outlier levels. If you're looking directional, kind of the biggest flows of the day. Also, this was I thought was really awesome. Going into either an option screener or a matrix tool. Okay, so the option screener, if I want to do nothing but 5-star liquidity, and I'm looking for like positive gamma, meaning like stocks that have a good opportunity of just going higher where they're already getting pressed higher than any type of like gamma resistance. And that means that prices can drift into those like, kind of, excess moves to the upside. Anything that has like 2 to 3 of these bright spots, like Ford has good upside right now. GM has good upside right now. I mean, anything that's like the first gex, this is all showing like the initial starts of like a gamma squeeze. Pfizer, I'm actually super stoked to see this. I own some shares of Pfizer. I'd love to see this going higher. Let's see where Pfizer's at right now. I own some shares. I've done some ratio spreads. Pfizer at 26. Okay, I've got a ratio spread on Pfizer. That's good. So anyway, I will spend some more time, navigating through this. Here's another one that's actually a leverage instrument. Never mind, but some good, some good positive gamma into the markets going into the end of the year. I do say this going into holiday trading. What starts to be put in motion, like up or down, tends to stay in motion. So anything that's showing like positive gamma and positive gamma squeezing will hopefully continue to drift higher through the holidays. I hope. So we have SPY, above the first gex. Let's see if we can get up a little bit more, like maybe having a couple bright spots. All-time highs aren't that far away. It wouldn't surprise me. It wouldn't surprise me if, I mean, again, we have to get through the Fed next week, but if there's no major price disruption on the Fed and we're not taking out these lows from the 20th of November and the 10th of October, that going higher, possibly getting to 700 on the SPY, possibly getting to 7,000 SPX, I do think is doable. I think that we could hit all-time highs. Would I just ride that momentum into like the moon? No, I think that we would possibly still have some nasty volatility over the next maybe 3 to 6 months. But whatever correction we do get, I will say this: whatever correction we do get, I think going into next year, that correction is probably going to be buy the dip. So if we have like a 5 to 10% correction, I'm probably buying the dip. If we even have a 20% correction, it would be nasty, but I'm probably still buying the dip. So, I will be, here on final hours, running all my sessions. I'll be live all over the place, trying to figure out where price can take us. Am I bearish? No, I am cautiously bullish, and I will remain that way. But hopefully for the holidays, it'd be nice to see that there's no major downside damage done, and the markets can just kind of hang out in here and just stay elevated. Like, don't get hurt, right? So I'm not deploying a bunch of cash at these highs. I'm just hanging out. Like all my trades, like waterfall income, for example, are all down here for profit. So as long as the market just kind of stays in this like holiday chop zone, or even if Santa delivers something this year, then these are all profit for waterfall income. Great. There's like $700+ of profit. And I mean, we shouldn't have to use a profit trap, but if we need one, we have one, then there's up to like $9,000 or $10,000 in profit traps. Okay. All right. I will. And if I can't do the final hour every single day, you'll still get videos from me. I still post on TradingView, which I put on my YouTube channel. So sometimes when I do a video here, let's go youtube.com/Chris Pulver. If I can't be live every single day, I will make up for it with some posts. So you come to my YouTube channel, go into posts, and I'm posting here. This was posted 3 days ago. So I did have like, we had Thanksgiving last week. We had disrupted holiday trading on Friday. Markets closed at 1. But talking about this on, Monday, Tuesday, I did post a video had a nice little though. So there's a trading view video, and then there's a bunch of news to go with it, like just my overall summary. So it's kind of like a blog. I just throw it on my YouTube posts. I throw it in Discord. I throw it in Twitter. So if you're following me out there, this stuff is available every single week. If I can't be live every single day, but I try. Okay. All right. Good stuff. Hey, everybody, it's Friday. Good work. We made it. Had a good trading week. Let's come back and do it again next week. Major news next week is going to be is it non-farm payroll? No, I think it's just Fed. Let me see. Next week news. Let's go next week. So next week we have cash rate for Aussie expected to stay the same. We have Joel's job openings on Tuesday, ADP non-farm. It's ADP, so not the official non-farm on Tuesday the 9th, as well as Joel's job openings. The markets are forecasting like an 87% probability that the Fed's going to cut December 10th, which is Wednesday. And here is your likely cut that's forecasted. Swiss National Bank looking to stay at 0%. Unemployment claims on Thursday. No major news on Friday. So your CPI, PPI, we had PCE today. No surprises on the PCE. We have CPI, PPI coming the week after this. So next week, it's all eyes on the Fed. So hopefully prices are, pretty chill going to the Fed. Expect some volatility on Wednesday. Expect the markets to open up some floodgates, maybe Wednesday, Thursday, Friday. But as long as there's no major technical damage done below this 65.50 zone, the market just stays intact. Like we could have a little fluctuation here, but if the market just has a dip and gets bought or just drifts higher, I don't think there's going to be a lot of holiday disruption. So we might be closing out some trades on waterfall income, project options edge, like I talked about, taking majority of those profits off the table. These are all good winners to wrap up the year. Cool. All right, good stuff, everybody. I'll let you go for today. Have a great weekend. I know it's short and sweet. Great masterclass for daily profit play. Couple of winning trades on waterfall income. Took a bunch of trades this week on pinch point. Project options that is looking great for like $2,600 in profit. If anybody's interested in some how-tos and some foundational education on option trading, the quick guide is $27. My full course is $497 if you want to upgrade. I'll just post this link for the $27 if you like it. Consider the full course for $497. It's 13 of my favorite strategies in a PDF. But the quick guide is a good way to get started if you like to trade options. If you don't even know what option trading is, it's a great place to get started. Literally, my favorite asset is trading options. I trade options on indexes, on stocks, on futures, forex, crypto. I did in like Bitcoin futures, but not really. But on IBIT, I trade options. That's a BlackRock ETF for Bitcoin. Trade options, tons of options. So why trade options? Better risk management. You have to put way less capital up front versus buying shares. And I mean, I can take 20,000 trades a year versus I can own the SPY and figure out what my break even is. There's a lot of flexibility, and I think if you care about risk management, if you care about good base hit trades and the ability to have stacked winners, options is a great way to do it. So anyway, quick guide. I'll post a link right there if interested. And if you want to upgrade the full course, I share that in the video, and you can just hit me up on that too. So my Discord, my Telegram. If you want to opt in, and you want to be in my daily profit plan morning every single day, it is free for everybody. So you can join me every day at 9 a.m. Eastern time. I run a service around it, but my overall morning session is free to attend. If you want my actual signals and trade with me live, then you can be a member of my daily profit play room, which is this service here. The daily profit play service is a members only Telegram that I take the trades in, but the daily profit plan class is, just prepping for the morning, getting a game plan, and then figuring out what I'm going to do. So, I often talk about daily profit play, waterfall income, double ups, news breakers, crash insurance sometimes, project options edge frequently, pinch point scanner. We have a daily watch list Wednesday. So I get to touch on a lot of my courses, in that live session. So, and I'm really excited for what's coming in the next 30 days. I should be releasing a tool. I'm calling it the income grid. And this is pretty sweet. It just gives me a macro dashboard in addition to some tactical dip levels to buy every single week, every single month, every single day if you want to supercharge it, and even quarterly for more of those passive investors. So we cover a lot of durations from daily to quarterly and high probability trades. Every single setup is, pending order. Let the broker, fill you. Let the price come to you. Never risk more than you can get in reward. Yep. September jolts includes alongside November's. Yeah, that's the thing is I don't really know how this data is going to be played out. I mean, if it's November data, I guess it's up to date, but I pretty much feel like we have this blackout of like we don't know what October did at all. So I don't think the market really cares, to be honest. I really don't. The Fed's going to cut, right? So the Fed's going to cut. The question is what is Jerome Powell's tone? If the cut is like, you know what, we're cutting because they'll never tell you that it's like we're cutting because the labor market sucks and the market dumped 3% in a day and everyone got scared that AI is in a bubble. So what's the Fed doing? They literally completely backpedaled and said, okay, rather than an 80% chance of pausing, we're going to flip that into an 87% chance of cutting. Like that's how they pay attention. Like they pay attention to this market. The market is a scorecard. Whether they say it is or not, it is absolutely a scorecard to make sure like things are stable. If you mess with the markets, it is a wealth effect, positively and negatively. If Trump messes with the markets, it is a wealth effect. Some of his biggest supporters do not want to see the markets crash. Some of his biggest supporters do not want to see real estate crash. So it is in the market's best interest and probably the economy's best interest to keep this wealth effect as cushioned and as padded as it can be, despite the K-shaped economy that we were in. So yes, labor market sucks, but people still have jobs. Unemployment rate is still low. I mean, I get it. Like AI is not painting a pretty picture of what jobs are going to be, but we still have companies making gobs and gobs of profits with high margins, and it still boosts the stock market higher. And we have fiscal and monetary policy on the same page. I think that's a bit more of a tailwind for stocks. So I wouldn't be surprised if even if we have some volatility ahead, stocks still go higher. The wall of worry. I'm a little bit more concerned in the near term as the AAII sentiment has flipped into a way more of a bullish camp. This printed Wednesday. So the bears retreated in a big way. Historical averages around 31%. We're now at 30.8 after being in the 40s for weeks and weeks and weeks. This is why I thought the markets were climbing all-time highs. Wall of worry, climb, climb, climb. Now they flipped. Now the bulls are like, all right, man, if you can't beat them, join them. So the neutral camp is down to 24.9. The bulls jumped up 12+% from last week. That's a huge jump in bullishness. Why? I don't know. But in the near term, we are above historical averages, and we're not that far away from one-year highs. Okay? We're not that high from one-year highs. So a little bit of volatility I could expect if we get into 46, 47, 48% bullish. Yeah, I probably see a little bit of a short-term top coming. Would I want to aggressively short it? No, I just want to wait for some dips and not be invested at all-time highs. So, all right. I think that'll do it. If you'd like to join me for my daily profit plan room every single morning, you can. I'll put a link to that as well. This is, give me 1 second, and then I'll let you go. Okay. So that link is for my daily profit plan room every single day, Monday through Friday. If you would like any information on my Tanuki Trade app, Gex Live using the tool, I have an affiliate code for them. They have officially made me an ambassador, which I'm really proud to be. And they have a great live web app for Gex levels. The option screen or the matrix is pretty awesome. Finding actionable items within one click, trading earnings, positive and negative gamma. Skew if you want to, when you have incredible skew in the market, like getting more premiums out of calls or puts, you can find these trades and develop a lot of good trading ideas. So just another way to kind of enhance your trades. Well, today's class being the recordings. Scott, you're asking for daily profit play. It should be, but it might be now that it's after bell. It's probably going to be I don't know, maybe tomorrow if the team's doing webinars. Otherwise, it'd be Monday. But if you're in daily profit play, go back to November 18th, 20th. Watch that masterclass. We still did the core strategy. We did the step-by-step routine of daily profit play, and then we put in the defense trades as well. So those November 18th and 20th recordings are great with the PDF, and then today's will be in there hopefully by Monday. Cool. All right. I will wrap it up there. Have a great weekend. I'll be back on Monday.